What happened in the last 10 days that everyone's freaking out about, 47,000 down to 38,000, really has nothing to do with GBTC selling. It has nothing to do with, people freaking out. It's just simple supply demand dynamics. You have the normal selling that goes on this time of year every year with Lunar New Year coming up. So Chinese sell a bunch to fill up the red envelopes with money. That's normal. But then we have another one that happens right before tax time in the US. The second thing is you had the liquidation of the FTX $1 billion of GBTC.
It is safe to say that the previous 2 weeks have not at all gone according to plan. As a result of the SEC's historic approval of 11 spot Bitcoin exchange-traded funds which was a victory that had been in the works for at least 10 years. Numerous Bitcoin and cryptocurrency investors anticipated rapid price increases. These gains materialized on January 11th, which was the first day of trading for the ETFs. The top cryptocurrency reached a new high of almost $49,000 per coin, marking a 2-year high for the cryptocurrency on the market. Nevertheless, a significant reverse started almost immediately, with Bitcoin plunging below $42,000, then $40,000, before a third catastrophic wave drove prices below $39,000 for the first time in nearly 50 days. This was the first time that Bitcoin has fallen below $39,000. A great deal of discussion has taken place, as was to be expected, concerning the origin of the price drop. Nonetheless, the majority of individuals, including Eric Balchunas, a senior analyst at Bloomberg at ETF, are of the opinion that it was brought about by massive outflows from GBTC. A well-known hedge fund manager named Mark Yusko has a viewpoint that is completely different from the majority. GBTC is reportedly experiencing a loss of assets, as stated by Mark, the founder, chief information officer, and managing director of Morgan Creek Capital. However, a significant amount of the withdrawals are being transferred to BlackRock, Fidelity, and other Bitcoin exchange-traded funds, which suggests that nearly nothing has been lost. Additionally, Yusko is certain that the outflows will ultimately come to a halt in the near future. The notable hedge fund manager claims that the investors who are leaving are using tax-exempt accounts, which means that they are able to afford to be dissuaded by the excessive prices that GBT charges. It would be financially impossible for investors who have taxable accounts to make changes of this nature in order to save 100 basis points. As a consequence of this, Mark anticipates that the amount of money spent will significantly reduce over the next few days. Mark was recently present at the Three Warrior Academy for the purpose of conducting an interview. As the chat progresses, he talks about the factors that have led to recent market declines, his projections for the future of Bitcoin and other cryptocurrencies, and the role of exchange-traded funds ETFs. We are providing you with highlights from the interview. We would appreciate it if you could take a time to like this video, subscribe to the channel, and enable post notifications for videos that are similar to this one in the future. Many thanks, and I hope you enjoy the video. So, the current situation is one of a demand shock. As a result, you have aggregate demand and aggregate supply, and an upward shift in the demand curve is being implemented. Okay. In any case, $30 trillion that were handled by advisors were just unlocked. But it wasn't because Vanguard, UBS, Merrill Lynch, and Bank of America said, no, you can't buy it. Doesn't this belong to me? You have my funds in your brokerage account, don't you understand? As a result, I really hope that everyone runs away from Vanguard, UBS, and Merrill because it is a mistake. This money belongs to us. However, you are claiming that I am unable to purchase this. As a result, it won't happen that quickly. Moreover, let us assume that in the year to come, those models, UBS and Merrill, forecast that 1% of people will forget. Take, for example, that you do 10 or 20 basis points. The demand is estimated to be between $30 and $60 billion. Therefore, if you move the aggregate demand curve, P1, which is the point where price and demand intersect higher than P2, P0, pone goes up and price goes up, you have a supply shock, which is a really clear phenomenon. When you take the block rewards and reduce them in half, you have one of the most brilliant ideas for engineering coding that I have ever seen. Not to mention, that is an outstanding assertion. On the other hand, this is the situation. Also, we have talked about this topic in the past, and although it is a little bit sexist, we are aware of what it is. Now, here is the big deal. You cut in half the amount of prices for the blocks. If the price does not increase, then what will happen? Because their costs are predetermined, 50% of the miners would be forced to close their doors. As a result, the price starts to go up. You do realize that when the price goes up, we guys will have Hunter in our pants, okay? If someone were to go by my place of employment, I would glance over to see if it was moving. It is to our liking. We will not be able to notice it if it is not moving. I mentioned ketchup to you earlier. In response, my wife adds, "Get the ketchup." Sweetheart, when I open the door, I find that there is no ketchup. There is no movement. I am unable to view it. Given that the bulk of the merchants are male, it is inevitable that the price will begin to increase. The traders begin purchasing it, which results in an increase in the total quantity. Consequently, the fair value is essentially increased by a factor of 2. As a result, the current worth of Bitcoin is approximately $50. We wind up about 100. A world in which there are no transaction costs would be ideal. According to inscriptions and ordinals, transaction costs are currently increasing at a rapid rate. Therefore, it's possible that we won't go from 50 to 100. But let's say we decide to go from 50 to 80 for fair value. In addition, Tim Peterson possesses a remarkable model of Metcalfe's law that is able to supply you with that particular amount. We are well below 80 years old at the age of 40. As a result, the numbers will begin to increase close to 80. In spite of this, you will face further demand shock, in addition to the demand shock that you first experienced. What exactly is fear of missing out, FOMO? As soon as the merchants arrive, they will announce numbers move in. The next group to enter is the gamblers and speculators. Then they start to ratchet things up. Therefore, just like every other fall, we are currently in the summer of cryptocurrency. June marks the beginning of crypto autumn. Between the months of June and June following the halving, we experience these absurd rallies, and on average, we receive 2 points that are 3 times above the fair value. Therefore, the most recent time when fair value was 30, we received 69. At this point, I do not believe that we will proceed to 2.3. I believe that we do not have as much power within the system as we would like. Let us assume that we are going to go 1.5. For example, if the fair value is 80, we will shift to 130, 150, or somewhere else within that range. In that way, things will turn out. The fear of missing out, foam to bring in a big number of people who are not very strong. There will be a subsequent bear market as a consequence of the bubble eventually bursting. However, that is 12 months from now. The prediction that Mark has made regarding Bitcoin during this bull market is not overly complicated either. For starters, a gradual growth in the fair value, which he estimates to be somewhere around $50,000 each coin. This growth, according to Mark's estimation, will continue until the halving occurs. In the wake of the halving, he anticipates yet another temporary sell-off, which will mark the conclusion of the cryptocurrency summer and the beginning of the cryptocurrency fall. Exactly. At this point, Mark's prophecies start to get really exciting. Between the months of June 2024 and June 2025, the founder of Morgan Creek Capital anticipates monumentally parabolic market movements. Mark is of the opinion that Bitcoin will easily achieve new all-time highs, potentially even doubling the current high. This is despite the fact that he always exercises caution. In the course of the discussion, Mark and Gary Cardone, both of Cardone Digital Ventures, investigated the distinctions between self-custody and investing in Bitcoin exchange-traded funds